Ever feel like you're trying to follow a conversation, but you're missing half the words? Like
Hmm.
there's this whole secret language everyone else seems to know.
Yeah.
Well, that's what we're tackling today. Specifically, how something like the US dollar index, the DXY, can actually give us hints about what the S&P 500 might do next.
Interesting.
We're diving deep with a trader who goes by the inner circle trader he recently called a DXY move with, honestly, spooky accuracy.
Right.
And we're going to break down exactly how he did it.
Okay, I'm interested. What's the secret sauce?
Right. That's what I want to know. So the inner circle trader, he's got this knack for spotting these connections between like totally different parts of the market. Like you wouldn't think the value of the dollar would directly affect, say, tech stocks, but
Well,
once you see the connections, it's like, whoa.
yeah, it's like they're all part of this big dance, right?
Exactly.
And once you learn the steps, it all makes sense.
So, no need to be a finance whiz for this, but get ready for some aha moments. First things first, though, got to make sure we're all on the same page. The DXY, what's the big deal with this index anyway? Why should anyone even care?
Well, think of the DXY like a barometer for fear in the market.
Okay.
When the DXY jumps up, it often means investors are getting a little jittery
Right.
and they're rushing to the perceived safety of the US dollar.
Makes sense.
Creates what we call a risk-off environment.
So it's like everyone at a picnic suddenly sees a swarm of bees. They're not sticking around to find out what's going on. They're running for cover.
Exactly. Everyone's scrambling for safety, and those ripples, they spread out everywhere,
Oh,
impacting everything from foreign currencies to, you guessed it, the stock market.
yeah.
You see, the DXY and the S&P 500. They often have what we call an inverse relationship.
So when one goes up, the other tends to go down.
You got it.
Okay, I'm starting to see why understanding this whole hidden language thing is so important.
It's like seeing the Matrix, right?
Totally, like you're seeing the puppet strings instead of just the show.
100%. Now, what the inner circle trader did was predict that the DXY would hit a low, a very specific low, at 99.92 and then bounce back.
Which of course it did.
Right.
So this wasn't just like a lucky guess. He saw something, some signal that most of us would totally miss. What was he looking at?
So he uses a technique where he focuses on what are called order blocks.
Order blocks, okay.
And these are basically points on a price chart where there was a real tug of war between buyers and sellers.
Interesting, like a big battle went down right there on the chart.
Exactly. Exactly. Big time battle. Think about it like this.
Sure.
These order blocks are like these little breadcrumbs on the chart.
Okay. Breadcrumbs. You're saying they give us clues about where the price might go next.
Right. Traders like the inner circle trader use these order blocks to try and get ahead of the curve, see where the market might shift, like from buying to selling.
Ah, I get it.
And in this case, he saw an order block on the DXY chart that was basically waving a giant flag that said, the dollar's about to make a comeback.
So he sees that potential turning point. Is that when he goes all in? Or were there other things he was looking at to confirm?
Well, this is where it gets really cool. As the DXY starts going up, like he predicted, the S&P 500 did exactly what we thought it would, based on that inverse relationship we talked about.
Started to drop.
Exactly, like clockwork. It's amazing to see those connections play out in real time.
It's true. But most of us are totally clueless, right? Like we're just watching the show, not seeing the behind-the-scenes action.
That's the thing. That's what this kind of analysis does. It pulls back the curtain. It helps you understand the why behind those market moves.
Yeah.
And it's not just those technical signals either. The inner circle trader, he also factors in things like seasonal trends.
Like how some stocks do well at certain times of year.
Exactly.
Yeah.
Retail stocks around the holidays, for example.
Classic.
Exactly. He specifically talks about May being a month where the S&P 500 tends to take a dip.
Interesting. So it's like the market has its own calendar, its own rhythm.
100%. And knowing those patterns, those tendencies, that's another tool in a trader's arsenal.
Adds a whole other layer to it.
Yeah.
But I mean, even with all that knowledge, even seasoned pros like this, they don't always get it right, do they?
No way. Even the best get it wrong sometimes.
Right.
In fact, the inner circle trader, he actually talks about how he missed out on a huge trading opportunity one time.
Really?
And you want to know why? He was taking his wife to the airport.
Oh, man.
Happens to the best of us.
Life gets in the way. But I'm guessing there's a lesson there, right? Like even when you think you've got it all figured out.
Oh, absolutely. Trading psychology, my friend, it's huge.
You got to be in the right headspace.
Even with the best strategy, the most amazing analysis, sometimes life throws a wrench in the works. And that's where discipline comes in.
Sticking to the plan.
You got it. You can't win them all, right?
Yeah.
And sometimes the best trades are the ones you don't make.
Interesting.
Speaking of which, the inner circle trader, he's a big believer in paying attention to specific market opening times. He specifically mentions midnight, 8:30 a.m. and 9:30 a.m. New York time. What do you think about that?
Well, at first, I'll admit it sounds a little like Wall Street voodoo to me, but I know there's got to be a reason.
Voodoo. I like that. But no, it's not about magic. It's more like, well, think of it like tuning into the global heartbeat of the market, you know?
Okay.
Because those times, they're not random. They're tied to specific events that can really get things moving.
Got it. Okay, so walk me through it. Let's start with midnight New York time. I mean, most of us are sound asleep. But the markets, they don't sleep, do they?
Nope. The party's just getting started in some parts of the world. London's already open for business at that hour.
Right.
And their trading activity, it can give you a sneak peek, an early heads up about what the market sentiment might be.
Interesting.
The inner circle trader, he pays close attention to the S&P 500 opening price at midnight, New York time.
Gotcha. So it's like a baseline reading before Wall Street even wakes up.
Exactly.
Okay, makes sense. So then 8:30 a.m. rolls around. The North American session kicks off. Things start heating up.
Now things are getting interesting, right? 8:30 a.m. Eastern, that's prime time for those big economic data dumps, you know, those reports that everyone's been waiting for.
Right.
And that, my friend, can really throw a wrench in things. Send those shockwaves rippling through the markets.
Makes sense. Volatility city. So is the inner circle trader mostly just watching to see if things go haywire at 8:30?
He's watching to see if the S&P 500 breaks above or below that opening price he noted earlier.
I see. So it's all connected.
Right. It either confirms his initial read from those midnight observations or makes him rethink things.
Okay, so he's piecing it together like a puzzle.
Yeah.
And then, of course, there's 9:30 a.m., the opening bell.
Ding, ding, ding. Now the real fun begins.
Right.
Everyone's piling in. That's when Wall Street really wakes up.
Individual stocks, they're fair game now. Headlines are flying, traders are freaking out. And yeah, let's just say things can get a little spicy.
To say the least. So how does the inner circle trader handle all that chaos? He uses that time, those mini heart attacks, every few minutes to fine-tune his game plan. You know, capitalize on those short bursts of excitement.
So by knowing those key moments, those pressure points, he's not just reacting, he's anticipating.
100%. He's playing chess while everyone else is playing checkers. But here's the thing, and this is important. He's not claiming he has some perfect system. You know, like he can predict the future with 100% certainty.
Oh, for sure. No one can do that, right?
Right. He's very open about the fact that sometimes the market just goes rogue, too bullish, too bearish, and there's nothing you can do about it.
He even said something like, sometimes you just got to respect the trend. Don't try to fight it.
Wise words. Way easier said than done, though.
Oh, yeah, especially when you're in the thick of it, right?
Oh, tell me about it. That whole story he told about missing that trade because of his wife's flight.
Yeah.
Case in point.
Life happens. But it does make you think about the bigger picture. It's not about being right every single time, is it?
Nope. Trading, this game, it's about having a solid process, managing your risk, making those smart, calculated moves. And yeah, sometimes it's about knowing when to just walk away.
Absolutely. Well, hey, we covered a ton of ground today on market relationships, all this behind-the-scenes action most people never even know about. What's the one big takeaway you want our listeners to walk away with?
You know, it's easy to get caught up in the chaos of the market. All those numbers flashing, the ups and downs, the news headlines, it can feel overwhelming. But what we've talked about today, it shows you there's an underlying order to it all, like a secret code. And once you start to understand that language,
things become a lot clearer.
Exactly. So, to everyone listening, next time you check the markets, don't just look at the numbers, okay? Look for those connections. Ask yourself, what is the market actually trying to tell me? You might be amazed by what you discover.
Great advice. And who knows, maybe you'll decode the secret language of the market too.
That's all the time we have for today's deep dive. Catch you next time.